we turn our attention back to Europe again, where the Greek finance officials are finalizing their plans as to the budget cuts for the country of Greece. We are now joined for more on this, Saruhan Hatipoglu, economist over at Beri. Thank you very much for joining us. And from New York, Henley Smith, CIO or Chief Investment Officer of Commonwealth Asset Management. Henley, let's start with you. We've seen these problems before in terms of these questions, whether or not Greek officials have the will to do further budget cuts that the IMF and other folks are expecting. Are they going to do it?
Well, I don't think they have much choice. I think at this point, again, all we've been looking for them is to buy time. I think we see Greece very much as Europe, a chronic illness with only thing that will solve it is time, and I think that's exactly what will happen here.
A chronic illness, Saruhan, we've had this discussion before that the Germans, and they've been in headlines very much about this, on one hand saying, yes, we support perhaps a loosening of some of the terms, but then we've also heard that they weren't going to loosen the terms, and what I'm referring to is Greek officials asking for a potential extension of these requirements of both budget cuts and the timeline.
Right, and Phil, I think the meeting this week is going to produce positive results for Greece because neither Greece nor Germany or the Euro leaders have much of a choice here. I believe they're going to give the extension, 2-year extension, which is going to result in less of a contraction, economic contraction next year, and it may be a modest growth in 2014, which is going to enable Greece to implement some of these policies without which they would not be able to. So I think they'll get the extension.
So you're optimistic. And Henley, I'll ask you this question because while Saruhan's a bit optimistic on this potential issue, if they do get the 2-year extension, does that make you more optimistic as an investor?
Well, I think the best news that I've gotten here in the U.S. is that interest rates are starting to rise. Maybe that long, slow climb is going to happen. So I think you're starting to see the mixed bag of economic news better than expected here in the U.S., and hopefully that'll filtrate its way into Europe. And I think U.S. is really the key here, and I think that will continue to be the driver. And if we can start to see interest rates move higher, I think that's a really good thing for the economy at this point.
Michelle mentioned earlier that volume has been relatively light in terms of the trading markets. As an investor, as you look at these markets, you look at the volume, what are investors focused on with respect to what's happening in Europe? Is it what the Germans think? Is it what the Greeks think? Or is there something else, perhaps Spain, that people should be watching instead?
Well, I think it's what the Germans think, obviously. We'll see on September 12th that their constitutional court is meeting to see if they can participate further in the ESM. But I think we look at Europe as a whole, and we think that they really don't have many choices here. As your other guest said, it's all about time. It is a chronic illness. It's almost like the common cold. There's no cure. The only thing we can do is keep the patient alive and get more time, and ultimately it'll solve itself.